Welcome back. On this channel, we have done extensive coverage of digital asset treasury companies like MicroStrategy, like Nakamoto, like BitMine Immersion Technologies. But is this rise of digital asset companies a good thing or a bad thing? Well, in today's video, we're going to be exploring how things are not looking too good as we are now, in my view, at the end stages of the bull market at the end of 2025 and entering a bear market as we are rotating in across the board asset prices that are now declining. And we're seeing things like this. A Solana treasury company just filed their quarterly report with the SEC at the end of 2025. And Sharps Technology, down 99% year to date. 99% year to date. You can clearly see here it went from $700 down to $2. This is literally like what happened to Internet Computer Protocol in the previous cycle. But what is going to occur with these other Bitcoin, Ethereum, Solana, XRP, and all of these other digital asset treasury companies? Can they make it through a bear market, or are we going to see collapses and effectively liquidations of these companies? In today's video, we're going to be exploring in depth, and we're going to talk about these companies in depth. We're going to look at their, their thesis, their strategy, and we're going to hear from different opposing views, whether these are good or bad for the stocks and basically for your wallet. Because we are here to make money on this channel through investing in the right direction, whether the market's going up or the market's going down, we make money on this channel. And so therefore, make sure you guys are subscribed. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. Also, do me a favor, give the video a free thumbs up, because thumbs up are free. Crypto is not free. Now, if you guys have been watching my videos, you know my viewpoint of where the market cycles are, how the market cycles operate and work. And if you don't, definitely go to my channel and look at some of my videos. We've been calling the top of the crypto market since July of 2025. And this effectively is when most of these Bitcoin treasury companies started to pop up outside of the mega ones like MicroStrategy. And as you guys are going to see in this video, that was the euphoric phase in the cycle. That was the top of the market effectively in the cycle. And now we're going to start with MicroStrategy, because MicroStrategy is the largest company that we have in the Bitcoin treasury space. Ro Ryder on X said all of the MicroStrategy preferred are Ponzi's and they're getting slaughtered. This not only destroys Michael Saylor's ability to keep raising funds to prop up Bitcoin, but it sends the dividend yields flying, leading to panic selling doom loop among the fixed income shareholders. Now, what exactly is Ro Ryder talking about? Well, he's talking about all of the preferred products that MicroStrategy has effectively launched over the last couple of years. Now, if you guys are not aware, you can go to strategy.com and you can see all of this information on their dashboard. But MicroStrategy is the stock. But then they have Stride, Strike, Stretch, and Strife. These are all independent products that are built on top of MicroStrategy, and they're what's called preferred products or preferred stock. Now, effectively, the most easiest way to understand how preferred shares operate is in the event of a liquidation or the company, let's say, going out of business, the Bitcoin that is held in MicroStrategy, which it's not really held in MicroStrategy, it's held in a subsidiary called MacroStrategy, but that's for a whole different day. At the most basic understanding is, let's say MicroStrategy was going to liquidate and they were going to sell all the Bitcoin and they were going to go into bankruptcy and all of that. You as a MicroStrategy shareholder are last in line to get access to that Bitcoin and therefore get paid back. The preferred shares get the Bitcoin before you. And each new product that MicroStrategy has launched, each new preferred debt facility that they've launched is senior to the previous one, effectively meaning they're launching new products that are senior, that get to the front of the line before the prior product. So effectively, Stride is junior to Strike, which is junior to Stretch, which is junior to Strife. And just recently, MicroStrategy launched Stream, which is a European preferred stock offering. And Stream, they raised almost $1 billion, about $700 million in US. Stream is senior to every single one of these other products. And so from an investor perspective, anytime you hold any of these products, they could just create another product that is senior to yours. Now, personally, I don't think that MicroStrategy is going to go bankrupt or go into liquidation. I don't think that's going to happen. I think that MicroStrategy is too big to fail. And they have a much longer time horizon, and they started a lot earlier than some of these other companies that we're going to be talking about in today's video. So I'm not as concerned about that, but that doesn't mean that MicroStrategy is not a risk. And that doesn't mean that MicroStrategy isn't a risk outside of MicroStrategy, AKA to the other Bitcoin treasury companies, to the entire Bitcoin and crypto market combined. And let me explain that a little bit more in depth. So like I said, the purchase price, if you combine all of their dollar cost averaging into Bitcoin over the last 3 or 4 years, MicroStrategy's buy price is about $74,000, $75,000. And so effectively, if it goes under that, technically, they could be called on by their shareholders to start selling Bitcoin, which would cause mass panic in the markets. I don't necessarily think they're going to do that, and I don't think that would happen because Michael Saylor still owns a large portion of this, this company. But you guys have to understand, there's a lot of other companies that have a much higher dollar cost average that literally bought the top of the market in 2025, $110,000, $115,000, $118,000. And those stocks are down 97% since the middle of the year. And so what we're starting to see here, Row Rider is talking about what Michael Saylor's preferred Ponzi's are getting slaughtered. Now, these at par should be $100. And that's not what we're seeing. We're seeing a lot of them significantly under $100. And so what they're doing is they try to kind of get people to buy these preferred shares is they raise the dividend. And then people buy it and they're selling it, right? So MicroStrategy is selling you what you're buying. They're not just buying it on the open market from a buyer and a seller. They're buying it as MicroStrategy is selling it to you, trying to pump the price up to raise more money as well. And they're raising money to buy more Bitcoin or to pay the dividend. Now, this gets very complicated. And this is part of what Jim Chanos calls financial gibberish, financial alchemy. They're creating all these products to create confusion in the markets. Maybe not purposefully, but it is creating confusion because a lot of people don't understand how these things work. And so what they do is like Stride should be at $100. Strike should be at $100. Stretch should be at $100. So to incentivize people to buy these products, they raise the dividend. Most of these dividends were at 8%, and now some of them are at 10%, 15%, or whatever the number is. And then people are like, wow, I'm only making 4% holding USDC. I'm making 0.01% holding my money in JP Morgan. I may as well hold my money in one of these products at a lower price than par, and they end up going and buying it. Well, when they're buying it, Michael Saylor is selling it. That way he raises money to buy Bitcoin. But he also has to pay the dividends. And right now, the dividends for MicroStrategy's whole liability is around $600 to $700 million per year. And so if you divide that by month, it's about $50 million to $60 million per month that they have to raise to pay the dividends. And they only really have one way to pay these dividends is to sell more of these products. And so effectively, they're selling products to pay the dividends on another product. So new investors, they're trying to gather by raising the dividend to pay the old investors of the dividend that they already owe. And effectively, that is kind of the definition of what a Ponzi is, right? You're taking money from new investors to pay your previous investors either what they're owed or what the dividend or interest rates are. This is a huge risk right now. Because here's the deal, they have to continue to pay the dividends so that these products don't crater. Because if they stop paying the dividends, although most of these dividends will accumulate until they can pay it, it will cause panic in the markets. And again, this gets very confusing, I get it, but this is part of the situation, right? And so effectively, if you're buying Stride at $66, you're getting 10% dividend, but at a $100 price point, right? It doesn't go lower because the strike price of Stride is lower. You're still getting 10% at a $100 price. So that accumulates. I think on most of these products, it accumulates even if they don't pay it. But the thing is, they're going to keep paying it. Now, in the longer term, this is not really going to matter in my view, because I believe Bitcoin is going much higher in price over the long term. So let's say the next cycle or the cycle after that, we get to $200,000, $300,000, $400,000, okay? Their buy price may go up a little bit, but it'll still probably be under $100,000, meaning their assets to what their dollar cost average is going to be 3 or 4 times what their dollar cost average is. And therefore, they could sell some of their Bitcoin at those higher prices just to kind of pay off some of this debt, buy back some of these debt obligations. And the higher the price goes, the less the debt obligation or the dividend obligation becomes. But this is over the course of a long period of time. In the short term, because these products are brand new, and because we are very close to the buy price of $74,000, and in my view, in the bear market, we're going below this dollar cost average price, this could cause mass panic in the markets. And it may dry up what they're able to raise in terms of these debt products. Now that brings us to the maximalists. Adam Livingston, who is a MicroStrategy and maximalist and somebody who apparently doesn't mind not making that much money in the markets. He said strategy can pay all the dividends on preferreds with like 3 to 4 weeks of ATM issuance, meaning selling shares on the open market, on just the preferreds. Game over. Haters are in shambles. Well, Josh, who's a well-known advocate and also critic of MicroStrategy, said, you just said the quiet part out loud. Sell more preferred stock to pay off the existing preferred stock. Then just stop paying the dividends, crush the market with fear, and let the fat caps swoop in and buy all your Bitcoin at cents on the dollar. People always forget. Solana may be flying high again, but the FTX bankruptcy payouts were valued at the rock bottom valuation. Game over. And so effectively what he's saying is that there's risk here, right? That the maximalists are like, no, there's no risk. They could just keep selling shares on the open market. But he can only sell it as long as people believe in it. The minute there's a loss of belief, and it appears that we're starting to trend that direction. I mean, if you look at all of these debt products year to date, they're all down. They should be at $100. That's the par value for them. Okay, Strike is at $80, but the dividend is still paying at a $100 price, par price. The Stretch is at $96. Massive drawdown after they sold about $130 million on the open market to pay dividends and to buy more Bitcoin. And the same thing is happening. The Strife is a little bit higher because this is more of a senior note, but you can see it's still down from $126. And by the way, Bitcoin isn't below their buy price. If Bitcoin goes below their buy price, these are probably going to crater even further. And so there is a lot of risk here, a lot of risk. But in my view, right now, I am bearish on MicroStrategy, bearish on most of these products, because Bitcoin is moving into and rotating into a bear market. But that doesn't mean I'm going to continue to stay that way. Once we get through the storm, and by the way, we're going to be talking about some other companies that are in more of a risk factor in just a minute. Once we get through the drawdown in the price, drawdown in the market, and we see some of these companies collapse, which is already underway, right? There's still a lot of people who are like, no, Cryptoviser, the Treasury companies are totally fine. There's nothing going on. It's like, that's, I mean, just based on the charts, that's not true. I mean, these companies are going through it, and we have to wait until they've gone through it. We're probably going to see some of these companies collapse, liquidate, get bought up by other companies, sell their Bitcoin. And by the way, it's already happened. We've already seen some of these companies selling their Bitcoin, selling their Ethereum. Sequence sold Bitcoin. ETHZilla sold Ethereum. And so it's already happening, and it's just going to accelerate the lower the price of Bitcoin goes. But there will be a moment where I turn bullish, where I will buy MicroStrategy. I will buy maybe some of these debt products that they have dividends behind them. But we're not there just yet. We have to go much, much lower before that happens. And by the way, anyone who is even trying to say, well, Cryptoviser, you're wrong, you're wrong, you're wrong. We're down 50% since I called the top on this channel. Go to youtube.com/thecryptoviser and just type in top on my channel, and you'll see I called the top in July of 2025, and MicroStrategy is down 55% since then, and going lower, and going lower. And if you invested in a inverse ETF like MSTZ, just since that top of the market, you're up 153%. Tripled your money. Tripled your money, while MicroStrategy went down 3x. So, yeah, that's that. Moving right along to some of the companies that you should be worried about. We're going to start right here with Nakamoto, also known as Kindly MD on the stock market. Predator said almost down 99% for Nakamoto. We are now approaching Terra Luna tier losses. I would love to know what was going through some of the investors' heads when they launched the Paper Bitcoin Summer Campaign and got everybody hyped at 10x the MNAV, which is the difference between what they own versus what they're valued at. 10x MNAV was they were valued 10 times more than the Bitcoin that they held. I honestly can't tell if they're evil or just giant morons. And basically he's talking about Nakamoto is down 97%. You could see when they made the announcement they're going to start buying Bitcoin, double top here in May, called the top shortly thereafter, down 99% since then, 97%. From about $25 down to 57 cents. And by the way, that's when I'm recording this video. I think this is going much, much lower. Much, much lower. David Bailey, the CEO of Kindly MD, also known as Nakamoto, said, someone sent me this tweet and none of this is true, just layers and layers of outright misinformation. I try not to respond to fake rage bait, but at a certain point, it's just too egregious. And it's in response to this tweet that says Nakamoto unwinds in about 2 weeks, basically a December unlock period, when the short-term bailout loan comes due. The collateralized Bitcoin position gets pulled into the mess. And David Bailey, the CEO's decision to spend $179 million to raise $740 million reveals itself as the most overpriced and self-defeating deals in history. And effectively, they're talking about the fact that the company that they worked with to work on this merger deal with Nakamoto and become a Bitcoin Treasury company, that their shares are getting unlocked and that they got paid too much. But David Bailey refuted this and stated, and by the way, this just kind of goes to show you, like, people don't really understand, like, these markets. They don't really understand the SEC filings, even though it's supposed to make things more clear. This user Zinx on X got this basically approved after he wrote it by David Bailey, who said this is what happened. He said the 11.6 million shares given to the company who worked on the deal was valued at $1.12 at the time, not the $12 or $20 that it was worth during here. They valued it at a lower price. So $13 million plus $20 million fee is $33 million payment for $740 million raised. And they use that $740 million to go and buy Bitcoin. The $150 million figure is for what the post-transaction share price ran up to, which was $13.60, which is not in their control, to be frank, or to be fair. And David Bailey said that this is more accurate. But it still doesn't remove the fact that the stock is down. precipitously. I mean, the stock is lower than it was before they even became a Bitcoin Treasury company. That's something to keep in mind. So Magoo on X said, basically, David Bailey, the CEO, said, next quarter, we can exercise our option to acquire Bitcoin Incorporated in an all-stock deal and gain $30 million of EBITDA or cash flow. And effectively, this goes into Nakamoto's agreement that they could buy David Bailey's other companies, which include like Bitcoin Magazine and the Bitcoin conferences, in an all-stock transaction. Now, to some, they say that this is basically a bailout or exit liquidity for these companies that they don't want to own anymore, like Bitcoin Magazine or the Bitcoin conferences, whatever companies are part of Bitcoin Inc. It is very important that these companies, like these Bitcoin Treasury companies, get cash flowing businesses, but buying the company that the CEO already owns after a 95 or 97% decline in the stock price, to a lot of shareholders, it's probably a bit of a turnoff. I mean, I'm not even a shareholder, and I'm like, they should probably wait until the stock price can move higher. But then the user, I mean, the executives may say, well, this is going to help us increase our share price because we're going to have now a cash flowing business, which is Bitcoin Conference and Bitcoin Magazine. But have these companies grown? Are they going to grow as Bitcoin is more mainstream now? Well, Magoo said, so Nakamoto is going to buy Bitcoin Inc. for at least $300 million, which is 10 times the EBITDA. Current market cap of Nakamoto is $280 million. That means David Bailey will dilute Nakamoto's shareholders by 50% and own the majority of the equity in Nakamoto next year. No wonder it's trading at such a low MNAV. Now, David Bailey said the price per share is locked in at $1.12. So your hypothetical, we get 300 million shares at $1.12. He said, so Nakamoto investors only get diluted 25%? Thank God. David Bailey responded saying, people should do their own analysis, but I personally think Nakamoto shareholders should be very excited about the transaction math. And so you can see the difference between shareholders, which Magoo says that he is, from my understanding, or even just an analyst in the markets, believes that this is just going to further dilute the shareholders. Now, here's the deal. I don't necessarily think that David Bailey is going to get those shares that they purchased the company with, because David Bailey owns those companies or is a part owner in those companies, and he's just going to immediately sell them to dilute the shareholders. I do think that David Bailey wants the Nakamoto to work out. But I think that they're in a really, really tough position because they've already lost a lot of people who had faith in the company. A lot of people have lost money in the company. They lost potentially the ability to raise more money for the company. But how low can the stock actually go? I mean, there is a potential that they will have to liquidate and they will not make it through the bear market. I don't know. And I'm not hoping for that. I'm just trying to analyze what is the risk reward profile here. But here's the deal. Even if they do not make it through the bear market, if we go 90% lower than where we are, which would bring us to about 5 to 10 cents, I think it would be investable at that point. And I think that people would be in so much panic if it went down that low that nobody would buy it. But I think that we would. I think that this channel, that would be a good arbitrage play. And I'm not saying necessarily a long-term hold because we don't even know if they're going to make it through the bear market. But if it goes down to 5, 10 cents and we buy and it doubles or triples or quadruples, just based on the excitement of potentially the company making it through the bear market, Bitcoin price is going higher. That's an easy trade. I mean, we saw that happening with Core Scientific in the last bear market when Core Scientific went bankrupt. We were buying it at 5 cents. Core Scientific was at 5 cents in the last bear market in bankruptcy. And it went from 5 cents to $1.20, which is like a 30x or something like that. A lot of people on my channel made that trade. And a lot of people on my channel made a lot of money on that trade. And so that is a potential. But it's still bad how low this price has gone in such a short period of time. And it's going to take a lot to bring it back up. And then that brings us to Jack Mallers' company, 21. Now, this is a clip back from April when all of these Bitcoin treasury companies were popping up and Jack Mallers was going to launch 21. Basically, Cantor Equity Partners is the SPAC merger company that they're going to be merging with. And it's going to become, 21 is going to become the company out of that. And they're going to own, a large quantity of Bitcoin. But we haven't seen it happen yet. The merger is not complete. And this user, Germ Crypto, on X gave a little bit of an analysis and said that 21's forms with the SEC have been delaying amendment language, which means we can expect another amended filing. Either the company is itself delaying to add more disclosures, or the SEC has few more comments. Keep in mind, when he wrote this, the government was shut down and is going to create a backlog for the SEC. But he says, on the speculative part of this, based on the available puzzle pieces, he believes that 21 and Tether are intending to launch a similar business model as Circle and Coinbase, maybe with Tether's new US-based stablecoin. He said, this is pure speculation, but I think it makes sense. And I would agree to a degree. I actually think that what we're going to see here is, I think that Cantor Equity Partners is delaying on purpose. And again, this is just my analysis, this is total speculation. We have been hearing over and over that we're getting a market structure bill to clear the road for crypto and stablecoin usage and implementation in the general financial markets. But it keeps getting delayed. We also know that Tether has had a very hard time with the United States in terms of different jurisdictions and their stable coin and trust in it and all of that. It seems to me that there is a very high likelihood, because of how connected Tether is to 21 and to Jack Mallers and being part of the investment, that they're waiting for the market structure bill to pass. And they're going to go full steam ahead. And why do I think this? Well, if we look at the expected board of directors for 21, we have Paulo Adorno, who is the CEO, I think, of Tether and has been. Bo Hines, who recently left as the crypto director of digital assets at the White House or something like that. He recently left the White House and then went to work for these companies like 21 and Tether. And he's potentially going to be on the board here. So it's kind of lining up. And it would make sense that Tether would be waiting for the market structure bill to pass. And that's a big if the market structure bill is going to pass. But if it does, then I think we're going to see the merger between Cantor Equity Partners and 21 and Tether go full steam ahead in the US, because then they're going to have the clarity and the approval and the regulation to move forward across the entire US. But if they don't pass the market structure bill, I don't think that we're going to see, because otherwise, why wouldn't 21 have already merged? Why wouldn't we have already seen the company come out? Because you guys can see a lot of excitement when they made the announcement that they were going to become the Bitcoin Treasury company 21. And again, since the top of the market, it's down 74%. And this is going to be a way to invest in Tether, to invest in the stablecoin launch with Bitcoin as backing. And potentially, this company could become bigger than MicroStrategy, because MicroStrategy has one business model right now, and their business model is just acquiring Bitcoin. They don't have any other real cash flow. Where if Tether was to become part of 21, in some sense of that world, plus the Bitcoin backing, this could be really big. But for now, all we're seeing is downtrending across the board in Bitcoin, in these Bitcoin treasury companies. And in my view, the treasury companies are imploding. And by the way, this is just a small portion of all the Bitcoin treasury companies that are in existence. We also have Ethereum treasury companies. We have Dogecoin treasury companies, Ethereum treasury companies, Solana treasury companies, and most of these are down and not really getting any much attention. And so what is going to happen in a bear market? Maybe nothing. What's going to happen in the next bull market? Well, if the prices of the cryptos don't go up, maybe nothing. Maybe they will liquidate. Maybe it's going to be worse for them. I don't know. We have to keep a very close eye on the big mega ones and also the smaller ones that have already lost significant value. Because if they can make it through this bear market, these may be some of the best investments we can make in the bear market. Forget about crypto, forget about altcoins. These may be it. Because if Nakamoto is able to pull out cash flow, a better business deal, less dilution, and raise more money to buy Bitcoin, not through some of these debt facilities, but through actual revenue generating businesses, and it does go down further from where we're at, it goes down 5, 10, 15, 20 cents. This could be one of the best trades of the bear market. So I want to know what you guys think. Do you agree with my analysis on all of these different companies, on the fact that these Bitcoin treasury companies are going to precipitously fall as we're entering the bear market? There's going to be bounces, but generally speaking, the trajectory is clear. As Bitcoin goes down, these companies are going to go down even harder. And their ability to raise money is going to be put into the test. And whether they're going to be able to do it or not, I don't know. But it's going to be very interesting to watch. And we're going to make money regardless, right here on the Cryptoviser podcast. So make sure you guys are subscribed. Give the video a free thumbs up, and I'll see you on the next video. Thanks for watching.